Hey guys, hope you are all having yet another splendid morning. The world is changing fast, and as we face the different set of challenges this imposes, we are slowly coming to realize that we are severely inadequate to respond to the many adversities that await us. Regardless on your stance on whether you believe in climate change or not, numbers don't lie. The world is heating up, and this will have plenty of effects on how the amount and strength of the natural disasters that are going to spread havoc. I know there are people that don't believe in climate change, and that there are also those that do, but that they don't believe humans are the main cause driving the sudden shift and surge. To these two groups of people, I ask that you remain patient with me and focus on the financial diligence report I am about to share with you, because whether you believe in it or not is not the point of the video. Wall Street sees the storm brewing, and mortgage bankers are started to freak out over it. I want to thank Navina Sadasivam for her journalistic breakthrough into this growing issue of concern. Much of what we are about to speak today is built from some of the pieces that Navina so graciously collected herself, so big shout out to you if you ever come across this video. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. Let's get started. The Research Institute for Housing America, which is a think tank by a trade group that represents the real estate finance industry, released a pretty striking report. Climate change is worsening and natural disasters are wreaking absolute havoc across America's housing stock. This has led homeowners to default on mortgage payments, which in turn forces lenders to further increase interest rates. Big government-backed companies such as Fannie Mae and Freddie Mac, who are tasked with ensuring affordable housing, have continued to issue risky loans for houses that are in severe danger because of the location and the probability of them being exposed to great damage. Already, the private sector is starting to back away from areas that face climate risks such as rising sea levels, repeated flooding and wildfires. We have recently seen how in some areas on the western coast of the United States, huge fires set ablaze almost consecutively. The southern coast of the United States as well as some areas on the eastern side are continuously flooding. Florida, Texas, Louisiana and New York are continuously facing huge floods that damage entire cities, and in particular, the housing available. The economic losses, which amount to the billions of dollars easily, are always imposed and taken by the federal government, which then passes it down to the taxpayers. The lower and middle class are always the ones being burdened by the costs of maintenance while the rich write off their fair share in loopholes. The Research Institute for Housing stated that climate change will impact all governments, industries and individuals. The problem with climate change in relation to housing is that the housing market still exists as a closed system in the sense that what gets damaged on one side will have direct consequences on the other. As we know it, the housing market is made up of homeowners, renters, insurers, government-backed entities, lenders, loan servicers and even the federal government itself. As climate change keeps getting worse, each type of group that we mentioned will be affected in different ways. Homeowners that live in Florida, for example, and continue to get flooded, will see the valuation of their properties diminished over time, especially as floods keep on getting worse and more consistent. As the climate and environmental situation keeps getting worse, you will naturally start seeing an increase of homeowners defaulting on payments. This financial strain will reflect on other members of the market, such as lenders, insurances and many of the others aforementioned a minute ago. As each member keeps being weathered by worsening circumstances they cannot control, eventually they are going to start experiencing major losses in their financial results, which they will not be able to hide or put off. The federal government stands in the center of the housing market, because it runs the National Flood Insurance Program, which is responsible for 51 million residential flood insurance policies nationwide. The loud alarm that has the Research Institute for Housing in alarm is the scenario where massive bailouts start happening is looming a lot nearer than you would think. The National Flood Insurance Program is already in a massive debt amounting over $20 billion, and a reputable research nonprofit organization found that 1% of the properties enrolled in the program are responsible for 25 to 30% of all the claims. The cost of paying out claims for floods alone already amounts of $12 billion. This puts into question whether it's fair to have the public have to fund these programs. Think about it for a minute. Do you think that people in states like Montana will be willing to pay more and more in taxes to protect the housing of people in a state like Florida or Louisiana or even Texas? This could become a hot political stressor in the future, because as far as science and Wall Street is aware, things are only going to get worse, and they are only going to keep getting more and more expensive. Federal regulators have already started to seriously examine the risks of climate change and the effects and risks they will impose on the housing market and the broader economy. Reports say that climate change will also test the margins and limits of insurances. Obviously, firms will attempt to try to quantify the risks associated with this and put a dollar value on them. We know climate models are not very precise and that action by the government to reduce emissions is something that many entities welcome. The reason why I bring this up is because since climate risk and the modeling of future events is so unpredictable due to so many variables and changing factors, there is no obvious way for insurances and other firms to quantify a price that will be agreed upon by regulators. As such, we are seeing many members of the mortgage industry already making decisions based on the risks imposed by climate. They are using both private and public data. Many firms are starting to steer away from disaster-prone regions. The problem with this approach is that it is extremely inconsistent. Without a firm set of guidelines or industry standard on how to price risk, every institution is developing their own method. As a consequence to this, there will be an inconsistency that could potentially create an uneven playing field where major institutions continue to support housing investments in the path of climate change's wrath. This is very worrisome, because it also narrows down the good valuable housing. With Wall Street already having the funds needed to make decisions based on mathematical models and probability, it means that people will be left to choose from an ever-shrinking set of available options. As such, the housing market will be further tilted to favor the big investment members at Wall Street, who will be sure to secure all the best property, as they have already started doing, and leaving the crumbs over to people. The problem here isn't that Wall Street is looking out for themselves. The problem is in the fact that there is still no regulation, set of guidelines or arbitration in any of this, and this neglect by the government will handicap the market in favor of Wall Street. Though officials are now starting to look into this growing problem, as I mentioned yesterday, Wall Street is already buying up tons of houses with plans to further increment their purchases in years to come. If federal regulation is delayed for political reasons, which ought to be what will happen as mentioned a bit earlier in this video, then by the time anything is done, bureaucracy will have once again robbed Americans off good housing. By the time anything is done, Wall Street for sure will have acquired the best housing in dangerous states, leaving the risk-prone ones to the middle and lower class. You can also expect on being past the cost of high insurance and taxes because Wall Street will not be paying any of it either. It angers me that these problems are not anticipated and addressed from the get-go, that they become so apparent. We are running against time, and so far, Wall Street is once again the one looking to be coming out on top, with everyone else taking the remains of whatever is left. Let me know what you think in the comments below, and I will see you guys later today for another pretty wild video on the afternoon. Thank you all so much for watching this video to the end if you are still here. If you want to support the channel, I have left links in the description for my Patreon if you would like to pledge a monthly support of any amount you want. I also left a PayPal and Cash App link if you want to make a one-time donation. Again, thank you so much for watching, and I hope to see you later today. Until then, to the moon.